The reason there's been so much built on the legacy system for all these years is because you haven't had deflection in that base layer, which is US treasuries, European treasuries, and now all of a sudden, in the last 2 years, you don't just have deflection of the bedrock, you have a damn earthquake that's literally shaking everything out of the building and everything's crashing and breaking.
When interest rates are finally going up, and they're going up fast, and so the Fed continues to raise the rates, they have all these emergency liquidity programs, and they're basically throwing duct tape on everything, all right? And at the same time, the Fed's over here continuing to try to raise interest rates to combat the inflation, but the two are almost at odds with each other.
They are at odds with each other.
Yeah, they are trying to ride two horses with one ass right now. There is no shortage of topics to talk about. The week started in dramatic fashion, I would say, with a global systemically important bank, Credit Suisse, coming under pressure late Sunday night and basically having a shotgun acquisition by their rival UBS. Basically, this started with Silicon Valley Bank and spread overseas to a large bank that they worried would cause wider financial crises and lead to more instability throughout the global economy. And so basically they had to come in there and they were one step away from even nationalizing Credit Suisse. That's wild. And so what are your takeaways just from that event that we saw Sunday to Monday?
I'm a little surprised it's taken this long to get to this point. The negative spread that we've seen in credit with inflation versus the rates that the entire credit market was set at was so massive that it was a little surprising to me that you had that amount of discount on all of the bonds on everybody's book. I mean, everybody's books that weren't marked to market, but you didn't get to a point where anybody believed that impairment was real until just the past couple weeks. So that would be my first comment is I'm surprised that it's taken as long as it did, but we're here now and you have that cascading amount of impairment that's happening across the entire banking sector. And it's just a matter of like, who's going to be the next domino to fall. And there are going to be more to fall.
Yeah.
And, the commercial real estate piece to this as well, that really hasn't even fully manifested itself as deep impairment on all these balance sheets, I think is going to be where you're seeing a lot of pain coming next. And, for more than a year, 2 years, as soon as we started getting these inflation prints like over 5%, we started hitting 8%, I was a firm believer that whatever the amount of stimulus was going to be on this next round, it was going to be 10 trillion plus is what it was going to take to do it. And based on what we've seen just in the past 2 weeks, it seems like that number might even be underestimated as to like what this is going to be, which is unfathomable for anybody to really even wrap their head around how big that number is. The numbers that we're seeing so far with a lot of the bank failures are much smaller, but when you look at what they're going to have to do to create new units and put them into the impairment, into these markets, they're going to be in the trillions. So, that's just some of my general thoughts on like everything that's happening. I think we're just beginning to see the cascading impact and what it's going to mean, and where that stops or like how long that explosion of credit's going to take. I don't really know, but once it gets going, it tends to move out and it moves pretty quick. So
yeah, well, this really comes back to the Federal Reserve, right? Because talk about the explosion of credit. Well, all these banks gorged on credit when interest rates were really low.
They had to,
right? Yeah. And the Federal Reserve is giving them forward guidance saying, hey, inflation's transitory. We're not even thinking about raising rates.
Yeah.
And so where were they supposed to go? They went into these risk-free assets and they piled all these deposits with their deposits completely ballooned during these easy money environment. And so they go into this, the Fed creates the boom, and now they're creating the bust, right? With one of the fastest hiking cycles in its history.
Something that's changed since '08, and Caitlin Long has done a great job talking about this, is just the APIs that you now have, like Plaid and like all these other things. And so you didn't have that back in the '08 crisis, where people can literally pull money out 24/7, and what they thought was systems that were just making the banking system more interconnected. Like Caitlin talks about this a lot. If you want to speed up and accelerate the speed of withdrawal and the speed of settlement, you now have higher capital requirements that have to sit at these banks in order to facilitate that withdrawal speed in a fractional reserve Ponzi scheme system. And so I think they got caught with the Silicon Valley Bank situation, where you've heard him, Yellen has said it in interviews, like, it happened so much faster than any of us expected. And I guess I'm sitting there and I'm like all these risk, what are these risk things that they keep running? Like,
tests.
The stress test. Yes, thank you. It's like they've been doing these stress tests for like all these years, and like, how the hell was that like not one of the things that they're like experimenting with? And I mean, these are basics. Like, I'm not from the banking sector. Hell, I'm just a person that just interviews people from the banking sector, right? So, like, I haven't spent time in the risk chair like a Greg Foss or like these other people in the space that have. And it just seems like such a basic question to ask when you are changing the rules at which the speed at which the funds can come out of their banks. So
you should probably have a bigger cash buffer.
It speaks to the incompetence. It speaks to like, it speaks to how much of a Ponzi it is.
Yeah.
The fractional reserve system.
Well, they cut the reserve requirements to zero.
Yeah.
In 2020, right? So.
Well, Balaji, it's like, he had this come to Jesus moment where all of a sudden he's a hardcore Bitcoin maxi, right? And it's like what caused him to come to that moment, like out of nowhere? Because I mean, he was a hardcore shitcoiner for a really long time.
Oh, hardcore.
And it's like what changed? Well, if I had to guess, and I don't know, but I would imagine he probably had $50 million on deposit at Silicon Valley Bank, and he probably, excuse my language, probably shit his pants over the weekend, and was realizing like there's only $250K that I'm going to get back, and my life savings or however much he had there was going to go to a goose egg if the government didn't decide to bail him out. And like, that's an event that will take somebody from playing around with all these experiments and like having fun in the space and just spreading other people's money, other LPs' money into like all these things, and realize, oh my God, this isn't like a test. This is for real. I could have lost like everything.
Yeah.
Everything. And so, and he's not the only person. I think there was plenty more, especially out in the Valley, that have heard about Bitcoin and known about the technology. But then all of a sudden, I have $5 million of working capital on deposit at Silicon Valley Bank, and I don't know how I'm going to potentially make payroll on Monday morning, and I might lose all of it, and I'm going to go bankrupt based on one person or 5 people's decision of whether they're going to save me or not.
Right.
And so like this was a massive moment in time, and then sorry, I'm just rambling here, but like yesterday, the speech, right? So like Yellen goes on after Powell, in which Powell says, yeah, we're backstopping everybody. Everybody's safe that has a deposit here. And then she goes an hour later or whatever it was and said, everybody might not be safe. And it's like, how are you supposed to make decisions? And Michael does an amazing job talking about Bitcoin being this bedrock that you can build on, right? Mm-hmm. That there's no deflection in that bedrock. And so you can build skyscrapers 100 stories high on a foundation that doesn't deflect. When you think about the legacy system, the reason there's been so much built on the legacy system for all these years is because you haven't had deflection in that base layer, which is US treasuries, European treasuries, because when interest rates go down for 40 years, you're making money. you're not losing money in that situation. This long trend that just rates always went down. And so that base layer of the legacy system was sound. It wasn't deflecting. They were always somehow kind of making money in any type of G7 country where all the buying power was stored in that legacy system. And now all of a sudden, in the last 2 years, you don't just have deflection of the bedrock, you have a damn earthquake that's literally shaking everything out of the building and everything's crashing and breaking. And that's the reality of that system. And people are finally seeing it. People like Balaji are now finally seeing how unstable and how mutilated that system is.
Yeah.
And there's plenty more with a whole lot of buying power that are waking up. They might not see Bitcoin, but they're waking up to this legacy base layer's got issues. And I mean, the Chapman video, right? Of him saying, if we just had a bank that we could just deposit our money in, that we didn't have to worry about it not being there. Like this is a joke of the gods to put all the buying power. And this isn't an interview; it's me ranting. I'm sorry.
No, you're going. Rant away.
It's a joke of the gods because this guy had like 5% of all Bitcoin at one point in time, and for him to fast forward to now and look at what's happening, which should be so obvious why he owned all that Bitcoin as the savior to his buying power, and to be sitting there making these statements as if he has no idea what the answer is. Like, you can't even make this up in a comedy.
Yeah.
Like, it's a joke that's beyond human comprehension.
Well, they had so much Bitcoin and he didn't understand what he owed, right? I mean, obviously not, because
which is why he doesn't have it anymore.
Doesn't have it anymore. The only like fully reserved bank is a full node. I think I saw Goldstein tweet that, and I'm like, that's so true, right? I wonder if he runs a full node, like even now. Like, you think he does? I don't know. Probably not. But you talked about how, the system is breaking, right? Or when interest rates are finally going up, and they're going up fast.
Yeah.
And so the Fed continues to raise the rates. And when it gets to this point, you have to wonder what they're going to do. And we saw what they're going to do. They have all these emergency liquidity programs, and they're basically throwing duct tape on everything. All right. Yep. And at the same time, the Fed's over here continuing to try to raise interest rates to combat the inflation. But the two are almost at odds with each other.
They are at odds with each other.
Yeah, they are trying to ride two horses with one ass right now. And so...
Well, just think about the backstop, right? So, like, if you're looking at a backstop, and let's just say the bond is $1 billion bond tranche, and it's trading at $850 million, okay? Because that's how much it's discounted based off of that parity between the yields and where the interest rates. It's sold off to that. It's chasing after that inflation, right, in the sell-off. And so far, it hasn't even caught up with it. And like, I'm being conservative with like a 10-year bond, like there's 10 years of duration left on the bond. It's probably down 15% from whatever the par was whenever it was issued. So if there's 10 years left on it. And so, like, when I'm looking at that and I'm saying, like, it has been destroyed, like that value, whatever the equity is sitting on those banks' balance sheet, like, you have literally eaten into all of that if you actually market to market.
Yeah.
So, I mean, you're just...
But they're not marketing to market, right? With their new bank term funding program, they can basically post those underwater bonds.
Oh, yeah. So that was the point where I was going.
Yeah.
So with that, like, what this backstop is it's yield curve control.
Yeah.
Yield curve control is QE, like, raised to the squared power. And so what is QE? QE is you go out, you buy the bonds, and you put them on, you put liquidity and cash into the system, and you then hold the bond. So this is that times raised to the second power, because they're taking all of those bonds. Anybody who wants to put them on deposit, they're bidding the price back up to parity, which is dropping the yield and pushing cash into the system. So it's a form of yield curve control.
Yeah.
For every bond. Right? Every single bond on every single balance sheet, if that person wants to put it on deposit. And if you don't want to put it on deposit, like, well, you're just an idiot.
Yeah. So what's to stop these banks? I mean, it totally removes risk, right? Interest rate risk for these banks.
It mutilates incentives. So like when you think about like where's this all going next, it's every time they step into the market and they manipulate the market, they're enhancing the systemic risk in the overall system. And so when they're making these decisions to backstop it, they're enhancing and consolidating risk, pushing it further into the hands of the few. Everybody's pulling their deposits out, making sure they're in a globally systemic important bank. Like all these things are making the system more and more fragile, and they're forcing the world into this binary CBDC versus Bitcoin type end state. Whether people like it or not, that's where it's going, right?
We talked about the FDIC cap of 250K, and then they made the controversial decision to fully back Signature and Silicon Valley Bank depositors. And now everybody's asking, well, will you do that for any of these small banks? Like there was a crazy testimony questioning of Yellen with Senator Langford.
Yeah,
who
I
asked
saw it. It's crazy.
The Oklahoma senator who was saying, hey, if my banks, my community banks in my state go under, are we going to get the same protections? And Yellen just fumbled and said like, well, we're going to decide, a supermajority vote at the FDIC.
Worst answer ever.
Supermajority vote at the Fed, and me in consultation with the president will decide who will get protected.
Yeah.
And so what is to stop all of these deposits from leaving these smaller banks for these larger banks? And you talked about how it's going to get centralized in the hands of the few. What's to stop it from continuing bank consolidation from happening into
Nothing.
these large banks, right?
Nothing.
And so when you think about that, though, what is the consequences of that? Because these small banks are critical to lending in the economy, specifically to agriculture, the agricultural industry, real estate industry.
Yeah.
I mean, what are the outcomes here? Have they even thought this through? It just feels like they're winging it.
Well, what they seek is order. They seek order. They don't want chaos on the streets. Okay. But when you're this far in a credit cycle, a long-term credit cycle, the Dalio description of a long-term credit cycle, when you're this far into that credit cycle, your actions are compounding the long-term risk at a short-term expense of, and what they're paying for is order.
Yeah.
And so they don't have a good choice other than in a stealth way buying Bitcoin and consolidating it. Like if you're looking at it from a nation state lens, is buy it in a stealth kind of way, stick it on your balance sheet, and then you somehow have to pivot to it at some point to try to mix what you're issuing, but never talk that narrative. I definitely don't think they're doing that.
Seems like the opposite.
But who knows? That's how you, like, if I was in charge of the Fed for a day, or I was in one of these positions, that is absolutely the path that you're going to have to take to do it, to manage the transition as successful as possible.
It seems like all of these, right now we're in a liquidity crisis, right? So they're laying down these swap lines. All of these emergency liquidity programs that they're setting up, right? It's a dollar shortage. But so they want to stop people from fleeing out of that system into Bitcoin, right? Because that would take the money out of the system into the alternative monetary system. And so what it seems like they've been doing lately is trying to shut off the exits. Yeah. And we have a coordinated regulatory attack happening really since the FTX collapse, accelerated into the new year. And now we're seeing it even accelerate more with enforcement actions. We just saw that Coinbase is going to get served a Wells notice. Now, some of this is just the broader crypto industry doing their shenanigans that we've warned about for a long time. Other actions, like from the Treasury and the comments from the White House, it seems like they are slandering Bitcoin and basically trying to usher into this CBDC, which would trap people into this failing credit-based system, right? Yeah. So how do you read this? All of that, the coordinated regulatory attacks that we've been seeing lately?
Just by like a show of hands of the people here, like who thinks Operation Choke Point 2 is real and alive and well? And like how many people think that that's just kind of, a salacious headline, or like anybody? Yeah, that's what I figured was like the general consensus. So I think it's absolutely in effect. I think it's absolutely coordinated. I think it's coordinated between large cap elite bank entities, coordinated with government corrupt government bureaucrats that sit in SEC and where else. I think those two are working in tandem with legacy media to distribute, like the story on Jack Dorsey this morning. Like, I'm sorry, like it was a total hit piece. The fact that the market reacted by 20%, like as soon as it opened, like, give me a break. Like, your typical shareholders that would like retail shareholders, they hadn't even read the story.
Yeah.
They hadn't even read the story. And even if they had time, they probably still wouldn't have read the story to propagate a sell order for that. That was big banks with funds sitting on a ton of those shares that were in concert with whoever the media, what's the name of the media organization that published it?
Hindenburg Research.
Yeah, like, to me, the whole thing is just completely orchestrated.
Yeah.
And maybe I'm going too extreme, but like it's a little hard for me when I see everything kind of playing out at the pace that it's playing out, and the stories as they're dropping. It just seems so coordinated to me. And what they're doing is they're actually providing the signal of exactly what not to do or who to trust.
Yeah.
They're providing the signal of the 180 of the truth. And I think more people are waking up to this idea that, like, if I see a headline that's bashing Jack Dorsey, my immediate thought is, okay, so like, who's trying to take him down, and what are their interests? Because clearly, like, the story is just blatantly false. I have people that have spent time with him in Africa that have told me like what he's doing is genuine and real. And like, to see these stories and stuff, they were going right at. It'd be the equivalent of me going to you, Sam, and like, if you were married, and so Sam, like, why do you keep beating your wife? Right? And you're there like, what? Yeah. What? Like, what did you just say to me? Yeah. Right? That's what they're doing to Jack and they're doing it to all these other people in the space. Is just like, they don't have to prove anything. They just have to say something that's extremely salacious that captures the attention, and then people are backpedaling so much to try to defend it that it creates this narrative in itself to try to defend it.
Yeah.
So
that's a Bitcoin company, right? That's just another Bitcoin company.
It's a Bitcoin company that's done everything by the book when it comes to the legal implications. That if I pull out my Cash App right now, I can buy Bitcoin instantly, like many others. But he's a multi-billion-dollar enterprise where everybody has a Square terminal in every one of these little businesses that you go down there into.
He's powerful.
Like, that's why he's different. And that's why they're extremely threatened by him. And that's why they're going after him.
Yeah, what did you think about Signature Bank? Because I believe they might have been the first bank to get forced to close. And Barney Frank was on their board and saying, "Hey, we're actually solvent."
Yeah, it's another it's another joke of the gods that the guy from the 2008 crisis that drafted all the policies for all the stuff that's blowing up right now is literally involved in Signature Bank, and then he's saying, "Hold on a second, everything that they just did is like, you can't even make it up."
I know you can't make it up, man. And like, when you look at Bitcoin, I've always thought of Bitcoin as this anti-fragile asset. So it's a competing monetary system. So it benefits from periods of instability in the traditional financial system. And I would say that the last week or two has been anything but orderly in the traditional financial system. Yeah. And we've seen Bitcoin perform. Like, we've actually seen it spike. It's the best performing asset this year in both risk-adjusted returns and absolute returns. So what do you make of Bitcoin's price action? It seems like from Swan's angle, a lot of clients are coming to us, and we do get the narrative. They are starting to understand what you said before about the inherent fragility that exists in the banking system, and the narratives of why they're coming to us and why they're buying Bitcoin. It's super encouraging to see, because this isn't like, hey, FOMOing in to get rich, more fiat. This is, no, I need to protect part of my wealth in Bitcoin. And so what do you think of this rally?
So being in Bitcoin for any duration will quickly teach you how to like endure like intense volatility. I remember, so like when I first started podcasting, like we only covered like legacy stuff. I only had investments in legacy equity.
Value guy.
It was a value guy, right? And like, if I knocked out a 20% year, in legacy markets, like I was like, I'm doing pretty dang good. I'm like proud of myself. And like the volatility you would see from day to day is like minuscule, right? And so if you ask me, Preston, how does it feel to be up 70% in a year where there's sheer chaos and it's only, March? I feel pretty damn good about it, right? Like it's pretty amazing. And, I think we Bitcoiners lose sight of like how unbelievable that performance is in a 3-month period of time, because you're immune to the volatility and you're immune to like, it's like, oh yeah, I did 150% last year. And it's like, oh, okay. Yeah, good job. Like, but that's a big deal. It's a really big deal.
Well, all right. So you're an advisor at Ego Death Capital. When you look at the space, what gets you excited besides the price action right now? I mean, obviously it's going great, but like, it's really about the building, right? It's really about the people.
Amen. Yeah.
And so when you look out at the space and the ecosystem, what just is getting you going right now, getting you excited?
So it's very easy for everybody here who lives in America or any other G7 country to just look at Bitcoin through this lens of it's a savings technology and it can preserve my buying power because all these other things out there are basically sucking that away. But what a lot of us don't really even begin to understand is just like what it would be like to live life for being unbanked or not having access, for me to instantaneously settle with you in a currency that's not getting debased by 50 to 100% a year. And for half the globe, they live in a situation like that. They are unbanked. And even if they are banked, they're dealing with a local currency that is just an abomination of corruption in their government. So when I look at the investing space from a venture capital lens, and I look at what Fedi and some of these others are doing, and what power that's going to bring, because a lot of these countries that are unbanked, they have smartphones or they have access to exchange digitally. And so Bitcoin's going to bring this, it's going to usher in this scenario and this situation where people, and it's also going to be ushered in these areas that are heavily pushing central bank digital currencies, is like, I can settle with you right now over the Lightning Network. I can give you $100. You immediately get it. And in some of these apps, I know Fedi is planning on rolling out this peer-to-peer network for people to put out solicitations for work, for anybody in the world to complete that work, whether they're building a PowerPoint deck or they're doing engineering work or whatever, any type of consulting work, soft service-based work. You can put out the solicitation right through their app, and then people can bid on it, and then you can pay them instantaneously and settle with Bitcoin anywhere in the world. Like, I'm very excited about that, and what that's going to mean, and what it's going to mean for actual utility and use of Bitcoin, and more importantly, layer 2 Bitcoin, which means Bitcoin on layer 1 are going to have to be locked into those channels, which means they're not coming back onto the market on layer 1 to be traded by, speculators that are trying to make a quick buck. And,
that's what Jack Dorsey did, right? They took their Bitcoin that they were holding with Block and they actually put it in the Lightning channels recently, right?
Yeah.
That's kind of just one example.
Why not?
Why not? Yeah. So, I mean, you talk about central bank digital currencies, and I believe that is the long-term battle that we're in, this kind of slow-moving chess match between central bank digital currencies and Bitcoin. How do you think through how that battle is going to come out? And do you think it's even worthwhile to focus on fighting against that, or should we just be focusing on what can we build over here in Bitcoin?
Well, you're not gonna be able to stop them from this desire for this short-term order at a long-term cost of making the system more systemically unstable. Like, they are incentivized to keep it going, right? So for me, it's an easy answer. Yeah, you need to focus on building and creating as much decentralization as possible into it. If you're running a full node, not settling for any type of compromise on 21 million coins and anything that's going to erode that decentralization on on layer 1.
Yeah.
And then just building out amazing things on layer 2 and building things that actually create value and efficiencies for everyday people that are using it as a way to exchange and transact. So,
Yeah.
And I think education, obviously, I'm biased here. I think education is massive, because the only way you're going to be able to get people to come around to using this new thing is for them to actually understand the benefits, understand the efficiencies, and to realize that there's a benefit for them to start using this. And that the only way that happens is through education.
Yeah. And that's fun because everybody can educate about Bitcoin too.
Yeah.
It's not just you. It's not just me. It's everyone in this room can orange pill all their family, all their friends, help them get into this life raft.
So the price of Bitcoin goes up.
No sell button. No sell button.